They talking that gangsta shit. It ain't about that. Man, matter of fact, hand me my strap. Show me where they at and stop them from talking like that. I'm the topic at every barbershop and beauty salon, cause he doesn't this that it rapping on the shit that I'm on. It's 50 this, 50 that, 50 stay with the gap, 32 shots in the clip, hello tipping the map. But when I come through, shh, the talk and stop, my money long now. I can make the pokey shot. Now we could blow an hour talking about the stones I rock or the hoes I got. Catching the stunts in the drop. Now he love the kids. 50 on that killer shit. That bag man, the bag man. Beat you up gorilla shit. I market my music like these on the block. So if you with me, you gon' eat. You gon' starve if you not. Weed smokers love me like they love Huda. I love your kid to a shooter. Crip niggas love me like they love Hoover. They tell me, see careful, cuz niggas wanna see like you. They ain't used to a G like you. Bang, they took your neck. That gangsta shit. That's one of my favorite songs. What's going on, y'all? It's your boy. I'm just letting this play real quick while folks roll in. I'll be right back. Even though this ain't about rhymes, this is about 6 ways to secure your family for life insurance. But ironically enough, we know I got shot 5 times in 2008, 3 days before Mother's Day in front of my mother. So I use the joke that they call me 25 cent instead of 50 cent because I got shot half as many times. But in reality, part of the problem was, as a young African-American male, the reason I got shot because I was trying to live that life of 50 Cent. Like he said, react like a gangster or die like a gangster for acting, right? So that's what ended up happening. So, we've got that. But today, we about to get into it. So we got a few folks here, so I'm ready to get started. Yo, 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 yo. It's your boy. Is my seat all the way up? Yeah, it is. Wow, I gotta get a new chair. This chair doesn't feel high enough for me. Time to buy me a new chair. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor, Alonzo Hall. And I've returned today to whap and tap on your head with another ADH wealth solution. Before we go in, ladies and gentlemen, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, please share, share, share. Lastly, to contribute to channel growth, to purchase life insurance directly up to $1 million with an instant decision and no medical exam, or to purchase life insurance directly. Oh, no, I just said that already, right? Or to schedule a one-on-one appointment with a licensed financial professional. The links are in the description. Let me do that one more time. To contribute to channel growth, to purchase life insurance directly up to $1 million with an instant decision and no medical exam, or to schedule a one-on-one appointment with a licensed financial professional. The links are in the description. So as we proceed to give you what you need, I'm going to hit y'all in the head with something that I found real poignant today. So let's add this to the stream. And we're going to get to reading. Now, this is from the American College of Financial Services. And as you'll see, it says 6 ways to use life insurance as a part of a comprehensive retirement plan. Now, this is just 6 ways, right? Experts suggest using life insurance strategically as a part of a comprehensive retirement plan. Well, I tend to talk about that often. Like I said, you don't really need to contribute to your 401k, get a cash value life insurance policy, and then when you outlive the life insurance or you outlive the need to pass that death benefit to your beneficiaries, you still got the cash value in that life insurance. You cancel the policy, roll the cash over into a SPIA, single premium immediate annuity, which is a payment till death. So unlike that 75-year-old woman at Walmart who's checking your receipts because her 401k was $120,000, which is period certain. So that 401k paid her $1,000 a month, which is $12,000 a year for 10 years, which is $120,000, which is all she had in her 401k. Once that's gone, she's back at Walmart checking the receipts. Meanwhile, we're here and we're about to show you these ways to get this to happen for you. So one, peace of mind and more. You see, let me turn this music off. Hold on. There we go. So having the correct type and appropriate amount of life insurance coverage in retirement can help protect income, provide tax-free cash flow, help manage taxes, provide peace of mind, and even improve the total returns in a portfolio. And this is from Jamie Hopkins, CLU, Certified Life Underwriter, RICP, Retirement Income Certified Professional, Retirement Income, co-director of the American College of Financial Services. Same from me. This is from the American College of Financial Services. Yes, financial services has an actual college that you can actually go to. So, you know, some people will say, you know, they have certain licenses. And like I said, just having the license doesn't mean anything. There's a lot of people who get the license. Just like making it to the NBA doesn't really mean anything. A lot of people made it to the NBA. A lot of people made it to the LA Lakers. Let's look at 3 people who made it to the LA Lakers straight from high school. Smush Parker. Who? Lamar Odom. Crackhead. Kobe Bryant. All-time great. Well, there's a difference between the 3 of them. One of those differences is how much they obsessed over their craft. Why do we call Kobe Bryant an all-time great? Because he obsessed over his craft. Why do we call Lamar Odom a crackhead? Because he put it in his work, but he kind of drifted on it. Why do we say who when it comes to Smush Parker? So let's look at lifestyle protection. Reason 2. Life insurance needs to be the foundation of any solid retirement plan. Hold on. If my man Rael is in the building, Young Investor, salute. What's going on, brother? My man Rael is in the building. I'd like you to please type in the chat how many times you've heard me talk about life insurance being the foundation. Even when you're talking about investments. If you go for investments or retirement accounts or ETFs or mutual funds or any of those investment products first, that would be like going to an architect, having them build your house and start from the roof. You would fire them because they didn't dig a hole in the ground, pour concrete, and have a foundation. He says countless times, bro. Countless times. I'm always talking about the foundation. Okay? It's just funny because these guys have credentials far beyond what I have. Well, not far beyond. They have letters behind their name. It doesn't mean that they actually are deep into their craft. Let's see. Young Investor says, while everybody was partying, Kobe was at the gym doing work. Exactly. And Young Investor, like I said, you're an up-and-coming financial advisor because you're in this field too. So don't think I'm not going to whoop on you, homeboy. You're going to get this work because I'm going to make you a dynamic financial advisor as well, even if you're my direct competition. In fact, I hope you're my direct competition because I want to make you so good that we're competing against each other. Iron sharpens iron. Of course, I intend to recruit you and have you work with me because my intent is to ultimately manage a black hedge fund, but we'll get there. So, as I was saying, part 2, lifestyle protection. Life insurance needs to be the foundation of any solid retirement plan. If your family depends on your retirement income, you can't invest your way out of an untimely death. And this is from James J. Meehan, MSM, Managing Partner at 1847 Financial. Number 3, risk management. Let me take the label off of this bottle real quick so y'all can't see that. Give me 1 second, actually. I got to hop off camera for a second. I need to go get my zinc. And while I have y'all waiting, I'm going to entertain y'all with music. It's not going to be a long wait. It's going to be less than a minute, but still. What you got? There you go, baby. They talking that gangster shit. It ain't about that. Man, respect. Man, show me where they at. I'll fucking do nothing like that. Oh! All right. All right, I'm back. Real quick, before I just want to show y'all, like I said, health is wealth, right? So one of the things, ironically enough, Erica Williams just posted up here about taking turmeric and cumin for inflammation. Black men, this is actually something very important. There was a study that shows that being a single black man leads to a lot of inflammation because black men, we have a lot of stress on us, to be honest. So you got your turmeric. You've also got your zinc, right? These are two things that are very important in keeping your endocrine system healthy and all that good stuff. Also, you want to drink lots and lots and lots and lots of water with lemon if you can. It's just kind of healthy for you. And one of the things that I'm realizing is if I'm going to be out here teaching y'all, I got to make sure to whip my ass on my health. So, you know, young investor, I already know you're going to hop on me because we be over in, you know, my man Anton's channel. And accountability is one of the things that men need. So, you know, if you see me slacking, bro, get to cracking. I don't mind. It's necessary. So, back to what we were doing here. So, number 3, risk management. Life insurance can help clients recover from financial risks and unexpected costs and increasing their chances of reaching long-term goals and achieving dreams. This is from Jen Sias-Like, an insurance agent at State Farm. Ironically enough, even though I am not with them and I never particularly owned a State Farm, I did own an Allstate, but not a State Farm. State Farm, besides their payment system that sucks, is a pretty good company in terms of the products that they offer. They're almost a full-service brokerage. I think they're getting out of securities because they got, kind of a slap on the wrist from the SEC. They also used to do mortgages. So if you have car insurance from State Farm, you're pretty good in some of their products there. But what I'm noticing, and this is my first time reading this article, it just got sent to me via email from my principal. And I said, you know what? I'm going to share it with my tribe, with my League of Extraordinary Gentlemen, LXG. We're in the building. So, Legionnaires, let's get it going. Now, I'm also noticing, however, one thing that I'm disliking as I'm reading this is that a lot of these people are talking about life insurance from the death benefit as opposed to the cash value accumulation. Let's see if they change that from as we continue. So number 4, an income safeguard, a 10 to 15-year term life insurance policy on both spouses prior to retirement can protect the retirement savings plan. And this is from Curtis V. Cloak, CLTC, LUTC, FRICP, retirement income expert. What I'm going to do is, because a lot of these are what's called designations, I'm going to, after I'm done reading this, take y'all over to the American College of Financial Services so that we can see what some of these designations are. For example, one of the newest ones, but the easiest ones to get, is the WMCP, Wealth Management Certified Professional. All you need to do is actually be licensed in the field for 1 year, and then you can actually get that designation. Now, a lot of these designations for, the general public don't really mean much, except for the fact that the general public has been trained to realize that if you have letters behind your name, like JD, WCMP, CHFC, whatever, it must mean something special in your field. So you might be a specialist. So they pay a little more attention. But a WMCP who's just been in the field for 1 year really doesn't know jack. Now, Tom Hegna is a guy that I follow big time. He's actually a mentor from one of my mentors that I mention a lot, who is Dave Kinder, who I have a special treat for y'all. I'm going to do an interview with Dave Kinder. It's probably going to be about how he can show you how to take a $460,000 retirement account and spend it as if it's almost $1.5 million. He actually did this for his parents. Now, this is a guy who is a perennial MDRT, $1 Million Roundtable qualifier. MDRT is the top 1% of financial professionals in 75 countries. So when you hear people in certain companies like PHP, People Helping People, PFS, Primerica Financial Services, FFL, and WFG, and a few others who say, well, we don't care about the MDRT. That's kind of like how Will Smith said was boycotting the Oscars. The only reason he boycotted the Oscars because he didn't get one. Well, people in those companies that I just mentioned, Primerica, People Helping People, Transamerica, World Financial Group, they don't get invited to the MDRT. Well, that's an industry award. So you'd like to be invited to that. Dave Kinder actually started to mentor me because he said, I notice you have the talent of an MDRT qualified professional, which is the top 1% of financial professionals across the board. That's why, young investor, I'm going to take you under my wing. He also, there's a Yahoo Finance article that showed that Caucasian financial advisors who are MDRT qualified should and have a responsibility to take Black advisors under their wing because, unfortunately, due to the wealth gap, Black advisors don't have the pool or we're not swimming in the big fish ponds with our families. Our families usually don't have generational wealth, so we can't even swim in those big ponds. I got you, no doubt. Let's see, licensed as in the Series 7 and 63. You don't need a Series 7 and 63. He actually has his 65. I used to have those securities licenses. Don't like them. I'll probably go back for them. The Series 7, I do have a young lady on my team who I took from Charles Schwab who holds her Series 7. But unless you're trying to be a full service stockbroker and like be on the trading floor, you can pretty much do what you need to do with the Series 6. And if you're really not trying to be hampered with regulation, like Common Sense Eli, or What Happened in Common Sense. You know, he was on JT the Pocket Watcher the other day talking about regulation. And I want to talk about that in regards to the Black manosphere and this brotherhood that unfortunately is not there because there's some BS. JT the Pocket Watcher has almost 50,000 followers, and there are not a boatload of them from the Black manosphere. And here's my problem with that. There's a Black woman by the name of Tiffany Alicia, the Budgetnista, and she has over 600,000 followers. 98% of her following is women. 95% of her following is African-American women. And we talk about this brotherhood, yet people like myself and JT the Pocket Watcher are not overflowing with brothers supporting brothers. That's a problem. Now, but yeah, no, young investor, I would recommend the Series 65, which is actually what I'm going for. And then when you manage, like, for example, if you're managing people, then you need the 26, the 29. There's things like the 92. There's a boatload of licenses. I'll give you a real good trick. Anybody who says they invest in Forex, ask them if they have a Series 3 or 4. And if they say a BMW, you know they don't know what they're talking about. They're using a Tradera or some other platform where you pay $89.99 a month, and you're still paying brokerage fees. We'll get into that later. But like I said, Tom Hegna is a mentor for David Kinder, who I'll probably do, like I said, that interview with. Actually, I have a video of Tom Hegna talking about one of his favorite products, which is an annuity, and he doesn't sell those. A substitute for bonds. So you can position life insurance as a substitute for bonds in a retirement income portfolio. The life insurance policy can provide bond-like returns of 3 to 5%, without the rate risk of a bond. That's because life insurance cash values are built on the bond market, which is why IRC 7702, which is something old. So a lot of these insurance agents and financial advisors who are selling you on, hey, IRC 7702, blah, 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 blah. Listen, even I was doing it. IRC 7702, y'all better get in these policies December 31st before things changes this January 1, which they did. But an advisor like me who likes to underpromise and overdeliver, I was selling on the 2% interest rate, even though you were guaranteed 4% interest rate growth, even though bond markets were growing at 1% for about the past 20 years. Joe Biden, thanks to IRC 7702, he made a rule as of January 1, all financial institutions who have their products based on the bond market had to increase their price because Joe Biden was like, nope, you got to increase the price. I don't care what you say. You got to make people pay more. I was like, well, we don't want to make people pay more. I don't care. You either make people pay more or I'm going to charge you a fee. So we didn't want to get charged a fee. We had to make people pay more. He also required us to slash the percentage yield that you're going to get by at least 1%. So now instead of a 4% guaranteed interest rate, people are guaranteed a 3% interest rate. Now, I've been selling for the past 7 years on a 2% interest rate. Generally, you'll hear me say life insurance grows at a minimum compound interest rate of 2%, even though it was actually 4%. But I like to underpromise and overdeliver. So when you buy a policy from me and you're like, well, Alonzo, you told me it was growing at 2%. It's growing at 4%. You're not going to be like, well, damn it, you gave me double the money that you told me you were going to. Nobody's going to be mad that I gave them twice what I promised them. Now, this is from Tom Hegner, a retirement planning speaker, author, and TV host. Now, number 6, tax benefits. When properly structured, and it has to be properly structured. And again, there's a lot of agents, and I'm piling on Primerica, but it's not the people in the agency's fault. It's the training that they get. Like buy term invest the difference is a great thing if it's done right. But most people don't do it right. When properly structured, life insurance can provide tax-deferred growth, tax-free cash flow, and a tax-free death benefit. The tax preferential treatment provided to life insurance allows an individual to have greater flexibility over which dollars to use during retirement. And this is from Russ Delibero, PhD, CFP, CHFC, CLU. Right? So, actually, again, you can learn more from the American College of Financial Services, right? Or you can call them, or you can go to the americancollege.edu, which I'm going to go to next. And again, the American College of Financial Services. Let me take a look at the comments here. You're taking an insurance and estate planning semester. Okay, course this semester. Yeah, bro. Let me tell you something. The collegiate courses are good, but what happens is they don't get into it in depth like what's called continuing education. So every 2 years when you're licensed, you have to go through what's called CE, and you have to renew your license. So every 2 years in the 10 states that I'm licensed in, I have to go through between 15 and 30 hours of retraining to relearn. So that's about 300 hours of training I have to do for these licenses, but it's worth it. Let's see. I was just saying this to Complex. They talk about brotherhood, but why aren't they heavy-hitting content creators featuring you? A lot of shenanigans going on here with these clowns. I don't even care if they're not featuring me right now at the moment, but because JT is has a lot more momentum than I do at the moment. And he has one license that trumps mine, but then my licenses actually trump his as well. And he actually said it while he was on the line with Common Sense Eli. He's not a broker, so he's never actually sold those particular financial products. He doesn't have to sell those financial products. He can make the recommendations. He doesn't get a commission from those products. I do. So I am a fee-based advisor. What a fee-based advisor means is I charge a fee and I collect a commission. So actually one thing, because Rael was on with me when we were on Mr. Fantastic's panel, and the dudes were talking about, well, what about that commission you're making? Failing to realize the commission is not paid by you, the consumer. The commission is paid by the company. So why do you care about my commission? Again, these are things that are pushed into your head by, a lot of unscrupulous financial advisors like Sue Zorman and Dave Ramsey. Well, these insurance agents get 90% commissions. And actually, if you're with some of those shitty companies that I just named, they aren't shitty. Let me not say they're shitty, but not the best companies. They will, beat people in the head. We pay you 200% comp. The industry average, if you're with a huge company like Prudential, New York Life, MetLife, which used to be in bed with Primerica, they got in trouble for being in bed with Primerica, which is why they are now called Bright House Financial. Those companies, the average is about 50% commission. So somebody pays $1,000 a month. Your commission is $500. I care if they feature you. Many of these dudes are older and need to have better sense. Plus, they're getting older and need to take retirement much more seriously. Well, this is true, brother, and I appreciate that. So let's continue. So now we're going to look at actually some of these designations. So one of these really big designations, and like I said, JT's licenses kind of trump mine, but mine trump his because I actually have to sell these products, right? So, for example, me and JT could work together, right? I would get certain products to you, and then I'd send you over to him because he does a lot of tax planning. Now, the difference in a certified financial planner and a CPA, certified public accountant, is that a CPA can represent you against the IRS in court, whereas a CFP cannot. But a CFP can help you, whereas a CPA is really just pretty much just going to do your books. Okay. The messed up thing, though, is a CPA can get their licenses without having to go through the training that we go through. So, Chartered Life Underwriter is CLU. Effectively using life insurance as a part of a client's overall financial plan takes an above average knowledge of insurance products, tax codes, estate planning, life insurance law, and more. The CLU, or the Chartered Life Underwriter designation, is the profession's oldest and most respected insurance credential. Advisors with a CLU are prepared to serve clients well by aiding in the retirement income planning process through the smart applications of life insurance products. I might as well become a CLU. I keep getting documents and stuff from, and let me see if I've got some stuff here from the CFP board, because they want me, when you're in the business for a while, they want you to grow yourself, right? Because you'll notice, and like I said, it's just like Smush Parker and Kobe Bryant. A bunch of people get their license and never do anything with it and drop out of the business. Most advisors are at 95% of insurance agents and financial advisors are out of the business in the first 2 years. If they last 2 years, 2 to 5 years, they'll have difficulty being employed by anyone else for the rest of their life. Like, it's so hard for me right now. I'm on 100% commission. I haven't, even though I'm number 3 in my company with, 20 grand in premiums, it's still a rough road, right? And in that rough ride, I have to look at the fact that I need stable income. And sometimes I'll go pick up, I like to pick up a meaningless job like a janitor or something where I don't interact with people and I'm at the bottom of the totem pole and all I do is scrub toilets all day. And then when I'm done scrubbing toilets, I'll come and help you with your financial future. Give me 1 second. I gotta go get my phone charger before my laptop charger before this goes down. I'll be right back, folks. I'm thinking about it, Rob. Stop and get every barbershop and beauty salon. Cause these other niggas that trap ain't on the shit that I'm on. This Jeezy this, Jeezy that, Jeezy daily. Yeah, 32 shots in the clip. Hello tips in the mat. Alright, got my charger so that I don't die out on y'all. And let me turn on my what's the name? Let's take a look here. He says, damn, this is dope right here. Yeah, bro, I'm trying, man. I realize that I got to come with the content for y'all. And the only way for it to happen is for me to actually do it, right? I'm really considering getting that CHFC. I'm sorry, the CLU. I'm really actually considering also the WMCP. But there are some things that are barriers to entry for me. Luckily, they're changing some of that. One of the barriers to entry is in order to get any of these designations, usually you had to have a 4-year college degree, which I don't have. But they've changed that now. You have to have either that or 5 years in the business, consistent. So Forbes is saying why life insurance is an essential piece, or why life insurance is essential for retirement planning by Jamie Hopkins. And this is a Forbes magazine article. Many people do not view life insurance as an essential and vital part of a retirement income plan. They see life insurance primarily as a way to protect family from the early loss of a breadwinner during the working years. And this we say way too often. However, life insurance has the potential to be so much more if properly utilized in a comprehensive retirement income plan. According to Jen Sias-Like, State Farm insurance agent, life insurance plays an important role in any financial plan. It helps loved ones recover from financial risk and unexpected costs, increasing their chances of reaching long-term goals and achieving dreams. Again, like I said, I don't like the way that they're just talking about this from the death benefit. Personally, I don't like to look at life insurance as death insurance. I like to look at it as life event insurance. And when you're looking at it as life event insurance, like I said, as a comprehensive retirement plan, screw your job's 401k. Especially if you're self-employed, you don't particularly need that. You can set up your own IRA, or you don't even need it. Just overfund a life policy, and then, if you die, okay, but if you live, you still won't outlive your money. And that's one of the things that happens often. I'll ask people when prospecting, hey, you got life insurance? Yeah, okay, cool. You took care of dying too soon. What about living too long? See, we don't think about that. And that's when you see them ladies back at Walmart. I need to check your receipts because they're living too long. So, where was I? So, thinking about financial protection in retirement can seem overwhelming, but as your life, this is small. There we go. Thinking about financial protection in retirement can seem overwhelming, but, as your life changes, so does your financial situation. Unfortunately, many people don't understand nor appreciate the benefits that life insurance can represent as a part of a retirement plan. Having the correct type of life insurance and the appropriate amount of life insurance coverage in retirement will accomplish multiple jobs. It can help protect your income, provide tax-free cash flow, help manage taxes, provide peace of mind to families, and even improve the total returns in a portfolio. Here are some strategic ways that life insurance can be utilized, or here's some strategic ways to utilize life insurance as a part of a retirement plan. It'll protect your retirement income. So, James Meehan, managing partner of 1847 Financial, says life insurance needs to be the foundation of your retirement plan. You can't invest your way out of an untimely death. When one spouse passes away in retirement, the surviving spouse often struggles to meet their income needs. That's because what happens when a person dies, two things go away: their presence and their income. I often sit with husbands and wives, or husbands or wives, and they'll say, well, my wife isn't working, so she doesn't really need life insurance because if she dies, I'm the breadwinner. There's no financial impact. Really? Let's ask some people who have lost their spouse. Actually, I have a friend of mine who lost his spouse, Dwayne Robinson. We did real estate together, and I'll probably bring him on the show one day and have him talk about the fact that he benefited from life insurance, I think, 2 to 3 times in his life. Once when his father passed, and then once when his first wife passed. Right? And what happens is your income goes away and your presence. So things like, well, I used to get up at, 7 o'clock in the morning, wash up, my breakfast was ready, and then I went to work. My wife was up at 4 o'clock in the morning, making sure that at 6 o'clock she was up, waking up the kids, making my grits and eggs and cheese, and getting ready to, send the kids to school. Well, guess what? Now you have to wake up at 3:30 so you can wash yourself and get yourself ready, then get your kids up, cook for your kids. You see how you need to have it on both of each other? It's a buy-sell agreement. Okay, while expenses might be lower, the drop in expenses rarely offsets the drop in income. At the minimum, one of the 2 Social Security benefits the couple was receiving will go away. So for many couples, life insurance can be used to ensure that there's enough money to replace any Social Security or any other lost retirement income. In this way, the surviving spouse is able to maintain his or her current standard in retirement. It can keep your retirement savings on track. According to retirement income expert Curtis Cloak, in the 10 years leading up to retirement, many couples find themselves playing catch-up on their retirement savings. During this period, if one spouse dies, the surviving spouse could end up being severely short on retirement savings. For this reason, Curtis recommends buying a 10 to 15-year term life policy. I wouldn't recommend a term policy at that age because insurance is cheaper the younger you are. So insurance really isn't paid for by money, except for when you're shopping by price. And then when you're shopping by price, it's still not paid for by money because there's a bunch of factors: your health, your credit, and your age. The big factor is your age and your health. Your health is the hugest factor. So the younger you are and the healthier you are, the easier it is and the cheaper it is. So Cloak notes that premiums for this term policy could be very inexpensive, so it won't place a huge financial burden on the couple. However, he notes that you might want to get a policy that can be converted into a permanent policy in case of future life insurance needs arises. A convertible term life policy will help you protect your insurability in case your health changes. Improve your investment asset allocation and returns. With interest rates close to historical lows, bonds and CDs are not as attractive investments for many retirees these days. However, many people still need some safe investments and assets in their retirement income portfolio. Tom Hegna, a professional retirement planning speaker and author and host of the popular PBS TV special Don't Worry, Retire Happy, suggests positioning life insurance as a substitute for bonds in the retirement income portfolio. Right now, bonds have very little upside, and they're only paying in the 1 to 3% range. Yet the risk of holding bonds is very high. If the interest rate rises, the downside risk to bonds could be 20 to 30% more. Hegna recommended that retirees consider a whole life policy as a bond substitute for some or all of their bond portfolios. The life insurance policy can provide bond-like returns of 3 to 5% without the interest rate risk of a bond. It can manage your taxes. So Russ DeLibero, CFP, CHFC, CLU, who also holds a PhD in financial and retirement planning, notes that there are tremendous uses of life insurance in a retirement income plan because of the preferential tax treatment that life insurance receives. You'll know I talk about MEX, modified endowment contracts, all the time, which are tax treated. You should get it, fam. With your knowledge base, this credential hits hard, especially with higher net worth clients. That's true. I may get that. I really may. Because I do have the knowledge of it. But and David Kinder actually just got his as well. But it's a grueling, like, you think this, like, Young Investor will tell you the Series 7 is a really hard test, and CLU is way harder than the Series 7. Okay. According to Dr. DeLibero, when properly structured, life insurance can provide tax-deferred growth, tax-free cash flow, and a tax-free death benefit. The tax preferential treatment provided to life insurance allows an individual to have greater flexibility over which dollars to use during retirement. Okay. Let's skip forward here. With tax rates constantly changing, and life insurance can also function as a hedge against future tax rate hikes. Did you know you can use your life insurance as a hedge against tax rates? The tax preferential treatment of life insurance, give me 1 second here, can be especially advantageous for individuals in a higher income tax bracket or as a hedge against a rising tax environment. As taxation rises, tax-free cash flow becomes more advantageous. Tapping into cash value income tax-free can be a great way to supplement a retirement income plan and at the same time help manage taxes. Make sure to investigate the ways life insurance could fit into your retirement plan. Now, not everyone's needs are the same. Some might benefit from term life insurance, while others will benefit more from permanent life insurance. Still, others might not have a significant need for additional insurance. There are those who already have insurance who may be underinsured and are leaving much risk on the table by not having the proper amount of life insurance, proper amount or type of life insurance. For those considering getting life insurance, sooner is better than later. Unfortunately, many people ignore the need for life insurance until some mortality event suddenly occurs. Jen Sias states that key life events such as marriage, moving, or buying a home, having a child, changing jobs, and retiring should signal the need for changes to a financial plan. Life insurance should be an important piece of that conversation. Take the challenge, accept the challenge, take the challenge seriously, because having the right plan and the appropriate life insurance policy can improve your retirement. Start the process today by doing your due diligence. Determine your specific life insurance needs. Get referrals for a quality life insurance specialist and review the companies offering life insurance policies before you purchase. Speaking of, I have a really special treat for y'all in a pre-record regarding Ethos Life Insurance, which is another carrier that I represent that was invested in by Jay-Z's Rock Nation. And another investment that they just made. Remember, life insurance can provide more than just protection during the working years. It can continue to provide protection and benefits throughout retirement. And you can follow me on Twitter at Retirement Risks. Check out my retirement ebook on Amazon or on their website at hopkinsretirement.com. Now, before we go there, or instead of us going there, I'm actually going to take us to the American College of Financial Services. So we're going to go to, the americancollege.edu. Oh, wow. Wow, I can't spell today. The American College of Financial Services. So we're going to take a look at their website. Check the chat while I'm at it. Yeah, I'm really considering it, Ra. But I want to see you guys. I want to show you guys these designations, right? Also, they have their 4 steps forward because, like I told you, the CAAFP, Conference of African. Actually, before I do that, let me pull that up here. So I told y'all the CAAFP, which is the Conference of African American Financial Professionals. They're doing a webcast, retirement. Okay, well, I'll be registering for that. So CAAFP 2022, which I was there, and CAAFP 2021, which I was there, stated that 5% in 2021, 5% of licensed financial advisors were Black. That might have something to do with why there's part of that wealth gap. Well, in 2021, this is the 2022 one. And, it's going to be in Washington, D.C. I'll be there, August 8th. Let's check the event details. How much is this one to go to? Give me 1 second. I want to see how much it is to go to this one. The other one was a couple of $100. Save the date, August 10th. Support. Yeah, how much is it to register? I want to register now. Give me 1 second. I'm not sharing that screen, am I? Hold on. Let's start a new share because for some odd reason it didn't. I'm going to share my entire screen really quick just because it's easier that way. So just so you can take a look, this is the registration for the CAAFP 2022. CAAFP is the largest gathering of African American financial professionals in the nation. It's time to come together in the community and engage in learning opportunities, networking, and fellowship. Young investor, I want to see you there. Also, I told JT about it. I don't know if he was at the last one, but I want to see him at this one. You know who else was there and how I learned about her? Tiffany Alicia, a.k.a. the Budget Nista. Okay? So just want to show you. So like I said, the 4 steps forward for Black America, right? Because we're looking to have more financial advisors who are Black, right? And as you can see, One America is one of their diamond sponsors, their platinum sponsors, NGL, New York Life Insurance, Penn Mutual, Prudential, Truist Financial, their gold sponsors, Northwestern Mutual, their silver sponsors, Emeritus, Bright House Financial, NFP, Raymond James, and State Farm, their bronze financial supporters, Ameriprise Financial, InvestNet, Guardian Financial, Lincoln Financial Group, LPL Financial, Mass Mutual, Securian, Pacific Life, Ohio National, Nationwide, M Financial Group. Another benefactor is Country Financial, the CFP Board, Protective Insurance, and they're supporting CAS, our Pearson View, and National Debt Relief. I used to work for National Debt Relief. Real quick, just this is something that I got from CIFP 2021 from Securian Financial. Because like I said, a lot of these companies, they give you swag because they want you to try and sell their product to the general public. So let me stop that right quick. Right? So like I got this from Securian Financial, right? So Securian Financial gave me this, and all this is a first aid kit with a few pieces of stuff in there. I got T-shirts from Morgan Stanley, State Farm, Ariel Investments, all that stuff. But let me share this screen back with us so we can take a look at the American College of Financial Services. Okay, so those are some of their events. Now, if we go to plan your studies, right? So it's choosing a program. You find the designation or degree that's right for you. Course delivery methods. So you can actually do these online. After your program, taking the exams, continuing education, and paying for your education. Because these things aren't that cheap. Now, let's take a look at the designations and degrees. Now, this is what's important. So, designations and degrees. Practical academics for professional advancement. Learn more about the programs available to you. In the increasingly complex world of financial services, the key to success is being better prepared than your competition. A professional certification or advanced degree from the American College of Financial Services will help. We offer real-time practical knowledge, curriculum delivery that meets the demands of your hectic schedule, and a proven approach to education in financial planning, retirement, coaching, insurance, philanthropic giving, and more. Since 1927, the American College of Financial the American College of Financial Services has helped more than 200,000 financial services professionals accelerate their careers. Our financial planning and insurance courses produce measurable results. Surveys show that our sales training can boost production by up to 40%. Holders of our financial planning designations increase their sales by as much as 51%. So, like you said, Ra, getting those designations would probably be a good idea. So now we're going to take a look at some of those designations. Your first designation, like I said, WMCP, Wealth Management Certified Professional, is a comprehensive overview of goal-based personal wealth and investment management. Unlike any other professional credential available today, WMCP helps advisors transform modern investment theory into applied knowledge that brings a new level of value to client relationships. And shout out to BMBBH, long live the habitual line steppers for sharing my video. Then you've got RICP, right? Which is a retirement income certified professional. In today's changing environment, the need for current effective retirement income planning is greater than ever. You can enhance your skill set and gain the knowledge you need to deliver meaningful, sustained value to your clients in their retirement years. The next one would be CFP, Certified Financial Planner, and that's a certified education program. The nation's best choice for advisors studying to become a CFP professional. Our expert faculty ensures that you are thoroughly prepared for your exam and the rest of your career. So now, again, they actually list them in order. So there's a lot of things that trump CFP. But a CFP is a really, really, really good designation, and a lot of people want them. I like WMCP personally, just because of the way it sounds. But you only have to be in the field for a year to get it, so it's not that dynamic. Next, you have CHFC, Chartered Financial Consultant. Advanced financial planning for every person and every need with practical application-based content. You'll be better prepared for greater success with the CHFC. David Kinder has a CHFC, and now he got his CLU. So, the big dog is actually the CLU, the Chartered Life Underwriter. You can protect families. You can protect clients, their families, and their businesses with the premier designation for insurance professionals. So then the other big dog is the FSCP, Financial Services Certified Professional. So you can gain the practical and ethical skills you need to build a successful practice. The FSCP offers the most complete skills training available today, with an emphasis on product knowledge and business marketing principles. Also, Rael, I got to give you a shout out because, give me 1 second. I want to, Trash Can Waves, what's the deal, bro? Series 7 ain't no joke. And I'll look into that event, brother. I plan on being a seasoned CFP, and then I'll get the WMCP. If you get the CFP, you don't need the WMCP. Get the WMCP before you get the CFP. If you get the CFP, you're wasting your time on the WMCP. Everything you can do with the WMCP, you can do that and more with the CFP. So you don't want to waste your time on that product when, if you're a CFP, you got the trump card, bro. So, you're not going to need, even though, well, let me not say that, because it's always also cool to have those letters, behind your name, right? That's always a cool thing, is just to have the simple designation. What I wanted to say is, Rael, you recommended this book, and I didn't realize that this book here, which is Family Wealth Transition Planning, I recommended this to my agency, because we have a book club. And in my agency with our book club, we read a couple books. This is one that we read, Mindset, Atomic Habits, and a few others. I recommended this, and my principal was like, yeah, but I want to focus something, more client-facing sales, and that's going to be beneficial to us. What he didn't realize, and Rob, I know it didn't mean anything to you at the time, but I looked at the back of this book, and I would recommend that you get this book, Young Investor. It's called Family. Well, you already got this recommendation in the Discord. This book, however, because it's part of the Bloomberg Press or Bloomberg Financial Planning. Remember I told you with the continuing education of my licensure, I got to take between 15 and 30 hours of continuing education every 2 years. Actually, I got to do continuing education this year before my birthday, because my license is going to be up. Family Wealth Transition Planning, Young Investor, is the name of the book. And this book will give you 14 hours of CE credit towards your CFP board, CE requirements. So, like JT has to go through CE all the time as well. Let me type it in the chat. Family Wealth. Oh, shoot. What just happened here? My computer just bugged. What's going on? Hold on. I'm having some glitchy issues here. StreamYard likes to suck a lot of energy out of your computer, apparently. ALTH transition planning. All right, so you're gonna want to get that book, bro. So again, FSCP, Financial Services Certified Professional. I may consider getting that. I don't know. And then you have CHSNC, Chartered Special Needs Consultant. So CHSNC designees have the specialized skills needed to help clients plan for the future with honesty, ethics, and compassion. A CHSNC can navigate the unique considerations of estate planning, special needs trusts, life insurance, tax deductions, healthcare issues, and more. And then finally, they have CLP. Well, not finally. Chartered Advisor in Philanthropy. I know maybe one person with that. That's kind of a weird designation. Not too many people are big on philanthropy like that. Let's see. What's this lady saying? I just got somebody who Facebooked me about a CPA. So the cap. So now when people say we're capping, Young Investor, next person that says we're capping, we're gonna agree to that and say, yeah, I hope to cap and be a chartered advisor in philanthropy. Yeah, I'm capping. The cap provides the knowledge and tools you need to help clients articulate and advance their highest aspirations for self, family, and society. Courses provide an insight to the process of philanthropic planning, included but not limited to tax tools and techniques. And then you have the CLF, Chartered Leadership Fellow, providing financial services managers with the knowledge and tools they need to achieve key organizational goals, such as recruitment and retention, setting performance standards, and developing business plans. So I want to look into a couple of these really quickly. Let's look at Wmcp. So Wealth Management Certified Professional. The WMCP is about individuals, not institutions. Bring a new level of value to your client relationships with a goal-based investment strategy that puts your clients first. What is the WMCP? So the Wealth Management Certified Professional is an online self-study program that provides professionals with a goal-based planning framework to build tax-efficient portfolios that meet a range of client needs, whether they're saving for college tuition, planning for retirement, or passing wealth on to others through estate or legacy planning. The WMCP program is for financial advisors, investors, and anyone interested in asset management. You'll develop your expertise in goal identification. Bring this mic a little closer. Risk management. I should probably use the doggone soundboard that I bought, but I don't ever charge it. So yeah, you'll develop your expertise in goal identification, risk management, and investment management plans tailored to client needs. Getting accredited provides the necessary tools to become an investor and a competitive edge in the market. Remember, I'm always talking about becoming an accredited investor. I talk about a few ways to be an accredited investor. One really easy way to become an accredited investor is to get a financial services license. Once you're licensed, you're an accredited investor. You don't have to meet the income or net worth requirements. An accreditation is highly valuable for anyone interested in working with securities and serves as a way to shore up your financial planning skills. The intersection of retirement planning and wealth management in particular holds countless opportunities for people with the right qualifications. So why would you choose the WMCP? So it's constructed by the 25 plus top wealth management experts. So what happened was a bunch of the top wealth management experts came together and put this program together to give newer advisors like myself, young investor, JT, Eli, what happened to Common Sense, Eli, some of the new agents in my field, Talani Granger, who's the young lady that I took from Charles Schwab, who owns a farmer's insurance in Colorado. They're setting this up for us so that we can take the wave. And there's another person who is explaining, now is the time to get, especially as Black men, to get into the financial services field, especially because the American College of Financial Services is targeting Black women. They're trying to get a lot of Black women into the field, and a lot of Black men are not getting into this field. You want to be a king, a boss? Guess what? This is a field you want to get into. We can ask Siri, and actually, Sheed We Here posted a video on his YouTube where these white guys asked, hey, what's the field that's created the most millionaires? People always say that it's real estate or IRAs. It's not. It's financial services. The business of money makes the most money. It almost makes sense, right? It's an industry-renowned program that received the Brandon Hall Group Bronze Award for Excellence in Learning. And there are no educational prerequisites. So you can start your learning journey today as long as you've been in the business for at least 1 year. Now, the program at a glance. The tuition is only $3,000. The timing, it takes about 6 to 8 months to complete. The format is 100% online self-study. And then the learning outcomes are to employ a goal-based wealth management process for financial planning and investment practice, create an efficient investment portfolio and develop skills, exceptional portfolio management skills, evaluate financial instruments like an analyst, assemble a wealth management strategy using portfolio management, investment management, estate planning considerations, and more. And you're going to provide solutions for complex wealth management needs. Okay. So this is kind of further in depth. So there are no prerequisite courses. You can begin the WMCP program, but 1 year of relevant business experience accumulated up to 5 years before completion of the program are required. So I can't even get a WMCP because I've been in the business too long to use the designation. To receive WMCP designation, you must successfully complete all the program content, including knowledge checks and simulations, agree to comply with the American College Code of Ethics and Procedures, and pass the final examination. Participating in the annual professional requirements program is required to maintain the designation. So you have to do CE, so on and so forth. And actually tells you their curriculum. So their curriculum is not a traditional series of courses, but rather a singular continuous learning experience customized to meet each financial professional's individual needs. The curriculum is addressed in 4 main categories: investment management theory, investment management tools, investment accounts, application, and portfolio management strategies. And these are the program faculty. So these are the people who are gonna who put that together. You've got Michael Fink, Wade Fowl, and David Blanchett. So now we're gonna go back, look at another designation really quick. Let me just take a look at the comments. He says the philanthropy one is a must-have. Yo, that philanthropy one is OD, bro. He said, wow, I didn't know that. I thought it was just income and net worth. Nah, income, net worth, as well as if you're a licensed financial professional, you're an accredited investor. You kind of have to be because you're dealing with that stuff all day, every day, right? So, and I think they just made that, and I want to say it was 2019, might have been 2018. Whenever they came out with the SIE, Securities Industry Essentials, which you think the Series 7 is hard. Believe it or not, the SIE is just as hard as the Series 7. I actually failed the SIE. I went for it, and I got a 60 instead of a 70. I got one question too many wrong. Literally one question. And my company won't sponsor me for it again. Well, that was last year. So this year they'll sponsor me for it again. But I don't even feel like taking it. I'm just going to go take the 65 because I don't want all that regulation. And I'm paying enough in errors and emissions insurance right now. I carry $2 million worth of errors and emissions. So $1 million aggregate. I already got sued for $1 million and had to pay $410,000. Never trying to get sued again. So it is what it is. Yeah, bro, the SIE is just as hard, if not harder than the 7, because it covers the 7. Okay, so once you finish the SIE, and to be honest, like I said, man, the 7 is garbage. Like they're what they're doing is the SIE is a way to get rid of the 6. Right? The reason I'm not going to get the 7 is because I hold my real estate license, and you can't hold the 7 and the real estate license at the same time. It's a conflict of interest. You can hold the 6 in the real estate license at the same time, but you can't hold the 7 in the real estate license at the same time. Yeah, actually, young investor, I think you, me, and probably Angel Tyler Braun should link up and do those study sessions. I have the PDF, and I'm trying to get my intern who just started with me. He just got his insurance license. I'm trying to get him to get his 65 so they can be on Team All-Star with me. We here, salute. I just mentioned you and how you was talking about financial services is the #1 business in the world. And you said, it's a shame, silly of me to try to convince people to do things to make themselves millionaires. And that was from my man, definitely putting that in folks' heads. All right. So the next designation I think we're going to take a look at is the CLU. So let's take a look at the CLU. Chartered Life Underwriter. So what is the CLU designation? The Chartered Life Underwriter is a financial professional with extensive knowledge of life insurance. In most states, a CLU designation exempts you from pre-licensing education and underwriting certification requirements. This means a CLU has obtained a level of life insurance expertise that exceeds basic life insurance underwriting requirements. A CLU certification gives advisors in-depth knowledge of life insurance underwriting concepts and life insurance law within the context of overall risk management. The necessary knowledge to help clients address their estate planning needs, and an understanding of solutions addressing the life insurance underwriting needs of business owners and professionals. The college is reimagining your CLU experience. View the program delivery section for more. Why you should consider the CLU. For nearly 100 years, the CLU designation has been the top choice for insurance and financial professionals seeking a knowledge on how to become an insurance underwriter and succeed in life insurance certification. Through the 8-course CLU program, you'll gain an in-depth knowledge or understanding of the practical, legal, and ethical aspects of life insurance underwriting and learn how to provide the best solutions to modern and diverse clientele facing a range of risks and financial situations. The CLU designation will not only expand the quality and breadth of the advice you're able to give, but will elevate your professional credentials as a certified underwriter and help advance your career. Life insurance is a vital part of a holistic financial plan, life insurance is a vital part of holistic financial planning for both individuals and small businesses. It's also a lucrative field where one sale can pay for the entire CLU designation. Whether you're just launching your life insurance underwriting career or an established professional trying to learn how to become an insurance underwriter and offer more to your clients, earning the CLU certification is an excellent choice. Damn it, Rael, you challenged me, didn't you? You said I should get it. Now you know I have to accept the challenge and go for it. Damn it. So, I don't know when. Oh, God. More education. All it's going to do is make me better. And like Ross said, with my knowledge now, it'll make me look better to those high net worth individuals. And me, you, and Complex got to get together. Complex just sent me something, but I'm still chasing after Lloyd's. Like I said, Lloyd's of London did $47 billion in premiums or in collected dollars last year. And most Americans don't know about Lloyd's of London. However, Lloyd's of London is the largest global surplus lines insurer and reinsurer globally. Nobody's bigger than Lloyd's of London on the planet, except for maybe PIMCO, but PIMCO is a mutual fund versus an insurance company. So, whether you're just launching your life insurance underwriting career or an established professional trying to learn how to become a better insurance advisor and offer your clients more, CLU is a great choice. So let's take a look at what I'm going to be learning. And young investor, if you're getting this, what you're going to be learning. So, centered on the complexities of life insurance underwriting for both individuals and small businesses, the CLU certification provides expert-level education you can immediately apply. Courses cover everything from the fundamentals of life insurance certification to highly specialized knowledge, preparing you to offer the advice today's clients truly need. When you earn the CLU designation, you'll gain expertise in providing guidance on types and amounts of life insurance, advising on annuities. Damn it, I feel like I have the knowledge of the CLU. I just don't have the freaking letters behind my name. Babe, you could have came this way. My wife doesn't like to be on camera. Helping clients handle issues of risk management, including risks associated with human capital, liabilities, property, and financial wealth in life insurance underwriting. Accounting for the legal aspects of life insurance underwriting, including issues pertaining to the basic principles of contract law, ownership rights, creditor rights, beneficiary designations, disposition of proceeds, and more. guiding clients through decisions on estate planning, including advising on wills and trust arrangements, advising small businesses on a range of issues, including tax and legal aspects of organizing a business, succession planning, transferring a family business, lifetime disposition of a business interest, and more, providing guidance in specialized areas of your choice in life insurance underwriting, with options including financial planning, income taxation, planning for retirement needs, investments, and working with people with disabilities and or families caring for loved ones with special needs. Yes, my love. Stop trying to not get on camera. I'm about to pull this camera on you. My wife is doing some crazy mess right now. He said, I told you, bro. Yeah, man. He said, this shit is hard body. Yo, Rob, I always get happy when we talk about this because, like I said, man, you know, this insurance, and Rod corrected me because he was like, nah, bro. I was saying, you know, I understand why people don't like it because at the end of the day, you know, insurance seems boring. He was like, yeah, insurance is boring because it's consistent. But he said, when them checks rolling in, that shit ain't boring no more. When them checks rolling in, we're happy about that insurance that was also boring. He said, and them checks just roll in and roll in and roll in. And if you're a CLU, you're going to make sure to help folks to continue that. So let's see. Professionals seeking to launch their insurance career by learning how to provide expert advice to individuals and small businesses with life insurance certifications. Financial professionals who hold the CHFC or CFP certification and want to enhance their careers by completing just 3 courses should go after the CLU as well. So this is one thing. It's difficult because a lot of CFPs don't hold their insurance licenses because they don't really want to get into that, right? It just like a lot of CPAs don't hold their insurance license. A lot of tax people don't want to get into insurance, just like a lot of insurance people don't want to get into taxes. Like I hold my PTIN, my Prepares Tax Identification Number. So legally, I can do taxes in all 50 states. All year, last year actually, prior to opening the barbershop, everybody kept coming to me, yo, you do taxes? Yep, but I'm not doing taxes. I'm not doing your taxes. I don't care to do taxes. I got it as a loss leader so that I could say, hey, I do taxes and push people into annuities. But I don't like doing taxes. I'm going to overcharge you for doing your taxes. So don't come to me to get your taxes done unless you got a simple 1040. Then I'll undercharge. Actually, I'm going to undercharge you anyway because I only charge about $200 to $300. Whereas, like I said, they start at $400 and then they charge $50 per page. Actually, when I was working at Liberty Tax, that's what they were having us charge. And I was like, yo, there's some little 19-year-old girl who's fresh out of high school. She's charging $600 to start with your W-2s. And she's fresh out of high school. It's a great thing to get into. Tax prep is a great thing to get into. You can make about $40,000 a year in 3 months. I have a friend, she lives in the Dominican Republic for half of the year. And then around this time of the year, she comes back. She usually goes up to the Bronx, around Dykeman. Shout out to the 30 Crips in Dykeman. And she does taxes for until April. After April, she's out. She's back in the DR, living like a queen. So program delivery, designed for the working professional. The 8-course CLU certification program gives you the power to study at your own pace and tailor your education to your professional lifestyle and needs. Because most people who are going for the CLU are working in that field already. So if we're going for that CLU, we're definitely looking at still managing our practice. Like I'm still managing my practice and I'm actually trying to grow right now. And I'm at an impasse at this point because I'm stuck between a rock and a hard place. I'm stuck between deciding if I do want to go branch off on my own, but I don't want a lot of the liability headaches. And I enjoy being at CG Wealth because there's a lot of support and stuff. And I'm really not prepared personally to be a full-fledged entrepreneur. I hear people all the time who are like, man, yeah, you're an entrepreneur. No, I am not, absolutely not an entrepreneur. I am self-employed. Now, yes, I am entrepreneurial because of being self-employed, but I am not an entrepreneur. All it is I own the job that I have, right? I don't have a system where in my sleep I'm making money or I'm making money off of other people's effort, right? That's why there's the disdain in my industry for, and you can even ask people like JT the Pocket Watcher, because he'll tell you, I hate, them MLM companies, Primerica, People Helping People, Family First Life, World Financial Group. Those are the main ones. There's probably a few more that I'm forgetting to mention. But the reason that a lot of the times we don't like those companies is because, unfortunately, what they do is they kind of railroad you into getting your license, and once you get your license, they're telling you to go out there and recruit people, and you don't know ish about the industry yet. So that's really why those companies get a bad name, because you have the blind leading the blind. Imagine, if you will, let's equate it to sports. Imagine, if you will, I decided to go into basketball and I was deciding to coach, and they decided to pick from 3 coaches: me, Tyronn Lue, and Phil Jackson. And I just got into coaching, and they put me on to coach the New York Knicks, and with their current roster. And they have Tyronn Lue, and he's coaching the Brooklyn Nets with their current roster. And Phil Jackson, and he's coaching the Chicago Bulls with the Michael Jordan roster. But it's a draft. And they're going to go, well, based on the draft, Alonzo, go get the best players you can get. Now, I've never done any training in basketball. I've never helped train a basketball player. I don't know the first thing about running a basketball drill, but I'm going to go out there and recruit the top players? Probably not. But that's what companies like Primerica are doing. Yeah, go recruit the top talent. How? I've never run a suicide drill. It just makes no sense. He says, this space is big enough to support you branching off on your own. We're going to help you branch off. Don't worry. You know you should be running your own enterprise. Yeah, I know, bro. I should. But I will eventually. I'm definitely going to be running. He said, yep, that's what Northwestern Mutual wanted me to do. Northwestern Mutual wanted you to recruit? Now, that's strange because NM is a pretty good company. They're pretty elite. That was probably the particular agency that you were interviewing with. I've not in the industry had a bad taste about Northwestern Mutual. Now, the Northwestern Mutual is a captive company, and if you're going to go somewhere, young investor, I'd recommend Charles Schwab. Why? Because Charles Schwab has the most independent advisors. So with Schwab, you don't have to be tied to Schwab, right? Like, I'm a broker, right? So I'm not tied. Like, I have my favorite companies, right? And one of my favorite companies, you'll see most of the time when I show you guys the illustrations, my favorite company happens to be Emeritus. But I represent a boatload of companies, right? But when it comes to those boatload of companies, like another one of my favorite companies is Mutual of Omaha. Actually, Mutual of Omaha is a favorite company of mine over Emeritus. The only reason that Emeritus took precedence over, I don't know that you want to be with United Bank Suisse right now, bro. But the reason that Emeritus took precedence over Mutual of Omaha for me was because they took their business out of New York, Mutual of Omaha. And we were in our office of 100 Broadway. They sent security up, walked us out the building like we were criminals. And we were like, what's going on here? they were like, yeah, nah, you guys don't work here anymore. What the heck? Yeah, we took our business out of New York. See you later. So I was like, well, wow. No notice, no nothing. Just, yeah, nah, you guys don't work here anymore. It was kind of crazy. So, select CLU courses are offered through the Personal Pathway Learning Model, which combines best in practice concepts, rich multimedia, and state-of-the-art technology in a flexible yet structured learning path with the tools you need to succeed, including digital textbooks equipped with online note-taking and flashcard creation, rich interactive lesson reviews, and weekly live or on-demand webinars, social engagement through discussion forums and news feeds, expanded instructor support and office hours. All other courses follow our traditional self-study model with robust course materials and interactive elements, including printed textbooks, downloadable ebooks for your iPad, iPhone, or Android devices, online discussions with your professor, audio and visual reviews, supplemental readings. Young investor, tap in with me on Facebook. There's a group, even though you're not in insurance, I'll see if I can add you to the group with David Kinder. And I'll see if I can get him to do some, he's going to tell you not to get your financial services licenses, because he's kind of the reason I don't mess with them anymore. He was like, listen, I can show you how insurance can beat all of that. Streaming lectures, online discussions with professors, pre-recorded webinars for CLU courses HS323, HS324, and HS331. Personal pathway courses. Hold on, babe, what you cooking? Babe, what are you cooking? Or what did you heat up? Oh. Okay. Did you finish making the chili? Well, can you heat me up a bowl of chili? No. Thank you. Love you. I get on her fucking nerves. Yeah, Schwab and UBS is like I said, Schwab is where I would recommend. Believe it or not, though, bro, because you're male, Morgan Stanley is good too, but they're captive. But Morgan Stanley, man, the reason I have a thorn in my side about Morgan Stanley, like I said, my mother-in-law just retired from there, and the way that they treat their African American or minority women is horrendous. It's I mean horrendous, horrendously horrendous. And so I didn't like the way that they treated their women. Specifically minority women. So tuition and fees. So CLU courses offered through Personal Pathway combine engaging life and self-study learning options for one flat fee tuition rate. Whether you prefer self-paced or structured, your tuition is the same. So an individual course is $850 for one course. So they actually, if you do program packages though, you'll get about $1,600 in savings. So if you do the 3-course package, it's normally $2,550, but you'll get it for $2,260. But you have to basically be a CFP to even qualify for the 3-course package. So unless you're a CFP, you kind of can't get the 3-course package. You got to get the full 8-course package, which is only $6,800. But if you do it in a one-time payment, you'll save $1,600 and it'll only be $5,199. Of course, you got to stay in the professional reader certification program. So these are the courses, right, in the CLU. HS311, Fundamentals of Insurance Planning. HS323, Individual Life Insurance. HS324, Life Insurance Law. HS330, Fundamentals of Estate Planning. HS331, Planning for Business Owners and Professionals. And then elective choice courses, which, like I said, I'm just going to do the 8 course and get them all. I'll pay the $6,000. It's worth it. Like they said, shit, when I was with actually, and he tells me to do this all the time, Laser Panda, aka Marty McFly. Yeah, Morgan Stanley is good. They start you at about 60 grand, and there's a program. You don't even have to be licensed. They actually take you as a college graduate, and they'll help you get your licensure. But you know, that's neither here nor there. Give me 1 second because I want to see something. I'm going to show y'all something real fast. Let me go grab another book. I guess I should say more than just a book, but a few more books, right? So we see all this stuff that they're teaching you there, right? But if we take a look here, how come, and these are all from Kaplan. So this is a securities book. This is for the Series 63. This is for the Series 65, and it's a pretty thick book. This is for the Series 6. I don't know what I did with my Series 7 book. That's another thing. I don't have the licenses, but I've read all these books cover to cover, so I know all the information in, out, up, down, left, right. I just didn't take the licensure. Or, like with the SIE, I failed by one question, and then I was like, yeah, F this. This is the SIE manual, Securities Industry Essentials. And then this is the life insurance manual. And if you'll notice, they're all from Kaplan. Kaplan is the most expensive study manual, but the reason I use and recommend Kaplan is in New York, which is one of the headquarters of FINRA, they actually use, they employ people who have written the exams in the Kaplan universities. So that's why I use Kaplan. So now you see all these principles. How thick is this book, right? And every 2 years I'm going for retraining, but there's still more inside of the CLU, right? So if there's more in there, right? Elective courses, and this is just about life insurance, right? So again, I mean, this book, you would think, well, you know everything you need to know. But obviously, if there's more in-depth training and you got to go through training every 2 years, there's a lot that goes into it, right? Life insurance or financial services is not like going to work at Walmart. Unfortunately, due to advertising, it's been brought down to that. I should also show you the only one that I didn't go to Kaplan for, which is my property and casualty insurance license, because Kaplan didn't have a face-to-face course for that. And the only license that I went to the face-to-face school for was my life insurance license. The rest of them, I did self-study. So the elective courses, financial planning, process and environment. HS 321, income taxation. HS 326, planning for retirement needs. HS 328, investments. HS 375, introduction to disability and lifetime planning. HS 376, legal and financial issues for special needs families. So this is the program faculty here. You see there's a lot of people who went into writing that CLU, CHFC, and CFP course. You've got Mark McLennan, who's an adjunct professor of business planning. Sophia Duffy, associate vice president of curriculum quality and an associate professor of business planning. Mary Hauser, who's an educational counselor. Kelsey Lefevre, an adjunct professional of special needs planning. Leslie Melilik, she does the taxation and special needs planning. Ross Riskin, associate vice president of academic strategy, associate professor of taxation, CHFC himself, education program director. Kevin Lynch, instructor of insurance. Clark Bards, endowed chair in retirement, planning and non-qualified deferred comp. And then Assistant Professor of Insurance, CLU Program Director, David Pierce, and Theodore Kurlwitz, Professor of Emeritus of Taxation. And then resources for insurance professionals. And that's about it, ladies and gentlemen. Let's take a look here. Let's look at some of the requirements. So, to receive a Huebner School designation, you must successfully complete all courses in your selected program, meet experience requirements and ethics standards, and agree to comply with the American College Code of Ethics and Procedures. Experience: 3 years of full-time business experience. 3 years of full-time business experience for all Huebner School designations is required. The 3-year period must be within the 5 years preceding the date of the award. An undergraduate or graduate degree from an educational institution qualifies as 1 year of business experience. Part-time qualifying business is credited toward the 3-year requirement on an hourly basis, with 2,000 hours representing the equivalent of 1 year of full-time experience. The following activities meet the required business experience qualifications, including the certification process. Insurance and healthcare. You can be field underwriting or management, including sales and service activities, supervision and management of persons involved in the sales or service of staff support of persons in those activities. You can be involved in company management and operations in positions involving substantial responsibility. Another requisite is financial services and employee benefits. So if you've done client service and related management, including direct contact with clients and management of persons involved directly in the process of providing financial services or employee benefits. Financial institution management and operations involving substantial responsibility. So they're only requiring 6,000 hours, not the 10,000 hours that it takes to become an expert. The other is you've got university or college teaching of subjects related to Huebner School curriculum on a full-time basis at an accredited institution of higher education. You're working at a government regulatory service in responsible administrative, supervisory, or operational capacity. So, for example, you work for FINRA. Activities directly or indirectly related to the protection, accumulation, conservation, or distribution of the economic value of human life. These include the work of actuaries, attorneys, CPAs, investment advisors, real estate investment advisors, stockbrokers, trust officers, or persons in similar occupations. Okay. And then that's the grid. So let me go back really quickly and check these comments here. Salute, what's going on? He said that book thick as a bitch. Wally, what's going on, brother? Thanks for the modding me up there. I mean, you're modding extraordinaire as usual. So yeah, man, these are definitely, some very important designations. Do I want to look at one more? Let's actually Google David Kinder really quickly. David Kinder. That's not the David Kinder I'm looking for. Here we go. Dynamic Wealth. Oh, where'd it go? Dynamic Advanced Wealth. Remember, I was telling you, he's my mentor, David Kinder. David H. Kinder. CLU, CHFC, RFC, and now he's got the CLU. Tax Exempt Wealth Specialist. Dynamic Advanced Wealth Insurance and Financial Solutions. He kind of wants me to branch off on my own as well. One of these days I will. It ain't going to be tomorrow. I really am enjoying working with Charles in the CG Wealth Solutions group. But eventually, ADH Wealth Solutions is going to have to do my own thing just because difference in direction. Charles is a few years older than me, and he has a difference in direction of where he's looking for his practice to be versus where I'm looking for my practice to be. But again, here's David Kinder. We're Facebook friends, all that good stuff. I think I'll probably make a website like this for myself. And here's some of his designations. Like I said, he's part of the IARFC, which is the International Association of Registered Financial Consultants. He is a registered financial consultant. He is and actually I should probably do that since I do call myself a financial consultant. Join the IARFC. But screw that. I'm going to wait until I get my CLU so I can do that. He's also got the CHFC. And let's take a look. Welcome, friends. I'd like to take a few minutes of your time and introduce myself to you. My name is David Kinder. I am the owner of Dynamic Wealth Insurance and Financial Services Solutions. I'm an over 15-year veteran of the insurance and financial services industry. I have served the needs of residents and business owners in Southern California in a variety of capacities. Currently, as a financial consultant serving families, retirees, and business owners with unconventional strategies to help them accomplish their retirement income and wealth accumulation goals. He does also hold his Series 65, which is why I'm going for my 65, because I'm like, yo, F the SEC and charging us all this stupid retarded money. Babe, did you actually heat up my chili?
No, I did not.
I was about to say, I thought you said no. I wasn't expecting you to do it.
Why would I do it if you're still on live and still having a conversation? You ain't gonna be smacking.
Yeah, I'm not going to be eating online. That's why I was about to say, you actually did it. Oh, my God. She's too submissive. I studied advanced financial planning through my various studies with the American College of Financial Services. I took private university level courses for over 2 years and passed over a dozen exams, proving my mastery and expertise in financial planning subjects such as investments, retirement planning, income taxation, insurance matters, estate planning, and planning for business owners. The state of California and all other states have licensed me to assist people with insurance issues to best protect their financial and estate values. I am also a registered investment advisor. He spelled that wrong. When you're an investment advisor, it's no longer with an O, it's with an E. Representative, authorized to give advice on securities and investment portfolios. So his professional experience, he was with Wells Fargo as a banker from 01 to 04. He was with American Express Financial Advisors. He was a financial trainee in 04. He was with Westcom Financial Services as a financial advisor and trust liaison officer 2005 to 2007. He was with one of the companies that I currently represent, Mass Mutual, from 07 to 09. He was with Combined Insurance as an insurance agent from 2011 to 2012, which means he was still with Mass Mutual as well, but he couldn't tell Mass Mutual and Combined because Mass Mutual wants you to be a career agent. But now, thanks to Kendall Gill, they're doing brokers. He was with Mutual of Omaha as an insurance agent in 2012. Dynamic Wealth Insurance and Financial Services from 2007 to present, which means all these companies are carriers he still represents. First Advisors National, he's an investment advisor representative. So this is recently from 2021 to the present. I'm going to have to let him know, hey, Dave, you got to change that from investment advisor ER to advisor OR to advisor ER. And then here are some of his licenses. Like I said, he's got that big dog, the CLU. He's got the CHFC. He's got the RFC. He's got the ethics approved status. He's got the Prudent Man Award. Obviously, he's got the life, health, and accidental insurance licenses. And he's got the FINRA Series 65. So as it says here, Unified Investment Advisor with an E law. So you'll want to be actually careful, folks, whenever you're going to somebody who says they're a financial advisor or a financial advisor, ER. If they're an ER, they're looking at investments. If you're looking at an OR, you're looking at, they're doing investments as well, but there's still, there's differences in their licensure, right? The ER is usually going to just charge you a fee, while the OR is going to charge you a commission. That's the major difference. So he probably has OR because he does fee-based. So he'll charge you a fee, but still get the commission. I'll ask him next time I call him. Ironically enough, me and Perfect Timing were in the back behind the scenes doing some talking together, and he got to speak to David Kinder live while we were on the Zoom call together. So I've been on for an hour and some change. I'm gonna get ready to rock off and hop off and go eat me something now that my wife decided to not give me my chili. Actually, I probably am not gonna have that chili because I want some ramen noodles. Ooh, I might put the chili in the ramen noodles with my vegetables. That sounds like a good idea. I've been on a ramen noodle kick for like the past week for some odd reason. I've been going crazy on ramen noodles. At any rate, it's your boy, the insurance junkie, your fiduciary fella, the all-star advisor, Alonzo Hall, and I just whapped and tapped on your head with some ADH Wealth Solutions. So, as always, ladies and gentlemen, if you enjoyed the content, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, you can contribute to channel growth. Well, you can schedule a one-on-one appointment with a licensed financial professional, or you can purchase life insurance directly up to $1 million with an instant decision and no medical exam. The links are in the description. With that being said, wipe ass, work in progress every day, and see success. Remember, ladies and gentlemen, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Salute. Ain't it amazing how crazy the hood done made me? Feels like my emotions are froze. I stay G'd up. It's the things I done seen and the stuff I've been through that made my heart turn cold. I'm a gangster, you'll find out for sure if you ever step on my toes. When I'm hanging out the window with that AK, veiling your punk ass with hoes. Salute, guap getters. Yes, we out here to get this guap. Remember, what's it say? Fix the title on retirement. Oh, did I, Oh, I sure did. I missed that E. Thank you. It won't let me make the changes right now. I have to change it after. But remember, ladies and gentlemen, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. You want to make sure that you accept that challenge. Competition is none. Knowing insurance should be mandatory for all business owners, especially barbers and shop owners, which most have nothing to fall on after they can no longer work in that particular field. Competition is none. You'd be surprised. I think I'm going to come up and talk about infinite banking again, because one of the concepts that I like is using insurance as your own bank. You know, using insurance to add to your net worth, right? Using insurance to buy a house. Using insurance to pay for college. Using insurance to pay for a car. You know what I mean? You gotta love it, Rob. It's only the truth. I was gonna leave, but you know, I'm excited and happy to go ahead and share that. Give me 1 second. I want to share David Kinder's stuff one more time, just because I think it's, you know what? Before I share David's stuff, what I haven't done is done ours, right? So let me share my company stuff. Yeah, the infinite banking is the truth. Unfortunately, a lot of people dislike it, and the reason that they dislike infinite banking, first of all, people use infinite banking wrong because they fund it with whole life insurance. You're not supposed to fund infinite banking with whole life insurance. You're supposed to fund infinite banking with universal or indexed universal life insurance. So that's the number one mistake people make when they're funding infinite banking, which is why a lot of people look at it as scammy. Another reason is because people don't know how to properly fund it, so they mess up what's happening when they do that. So real quick, let me show you guys your boy, the insurance junkie, the fiduciary fella, the all-star advisor. So this is our company, www.cgwealth.financial, right? So you'll see our homepage. As you can see, we're a black-owned firm. We're actually the only black-owned, one of two black-owned IMOs, which is independent marketing organizations, out of New York. The other is Martin and Murray Solutions, LLC, which are guys that I actually used to work with the D. Paola Financial Group. It's a brother by the name of Dane Murray and Jonathan Martin. Great brothers. They're my direct competition, but I'm promoting them brothers too. You know why? Because there's enough for us all to eat, right? You go down the bread aisle, there's a million different breads, and one bread is going to be for somebody, the other bread's not. Those guys are heavily Christian-based. I don't believe in that stuff. So people who are heavily Christian-based might be comfortable with them versus me. You got to realize you're not everybody's cup of tea, but that's good because not everybody should be your client, right? So as you see here, families and individuals, whether you're planning for the future, a rainy day, or just next month, we're there for you all year round, not just tax time. We deal with annuities, disability income, investments, life insurance, retirement plans, and more. Businesses, private clients, first-time budgeters. Let us figure out a financial strategy that works for your life. Get in touch with us and let's start talking. We're talking about workplace benefits, protecting your business, and succession planning. If you want to join us and become part of the CG Wealth Solutions group, we've got career training, career sampling, college graduates and interns. It's a place to succeed with a strategic alliance program. You can actually contact us. And this is my principal's information. And this is our office in Long Island City or Queens, New York. We're at 3100 47th Avenue, Suite 3100 in Long Island City, Queens, New York. That's Charles's email, cgalliard@cgwealth.financial. Mine is a.hall@cgwealth.financial. And this is the office telephone number. I just give my personal cell. If you really want to work with us, though, I'll be honest, and we do need some new blood in the company. Let's see. This is drop your website. You dropped on Rhonda's channel. No doubt. Let me do that really quick. He said you got a good plug with David Kinder. CG Wealth .financial. I spelled it wrong. Okay, so now let's look at the about, because I didn't get to put my whole bio in here, but let's take a look. This is where the office is. This is a great section. I actually went to this section. If you ever want to work at the U.S. Open, there's a company called Amerivents that holds a thing here every year, so you can go to the U.S. Open. I go to the U.S. Open because I find a lot of wealthy clients there. So the story of CG Wealth Solutions. This is CG, Charles Galliard, the principal and CEO of CG Wealth Solutions, right? AKA my quote-unquote boss, if you will. So Charles is a professional financial analyst and award-winning sales director in building life annuity, disability annuity, long-term care, small business solutions, and investment agency distribution channels. He's been in the industry for over 26 years and has earned a bunch of awards. Charles is a driven strategic sales director, bringing extensive experience in leading sales teams with financial skill sets, developing and implementing sales staff, recruiting programs, as well as training staff cross-functionally in sales process. He's developed a productive and profitable representatives through recruiting and training and sales staff. He's applied a collaborative discovery process to determine client suitability, known as the growth-oriented participative leader. He relates to his team members from the field level, thereby providing a sense of community and familiarity, which works to drive better results. So, he's earned a Bachelor of Arts in Business Administration and Criminal Justice from Fairmont University in Fairmont, West Virginia. He's got the Life Health Accidental Series 6, 63, and 24. The group ourselves has actually, we need to increase this because now we've got more licenses. But the group has individuals licensed in New York, New Jersey, Connecticut, Georgia, West Virginia, Montana, Missouri, Texas, Virginia, North Carolina, Florida, Georgia, Colorado. What else do I have? Yeah, there's a bunch of states we're licensed in. Okay. We'll look at Sharon Cranes, who's the firm director of talent acquisition. You can email her at s.cranes@cgwealth.financial. And her phone, she was born in the Bronx. She's experienced in insurance, 401k, education, benefits administration, and recruiting. Then you have Thomas Hayes, who's the firm director of training, which personally I think that's more myself. I do more training with the younger agents than Thomas does, personally. And we'll probably have to bump heads at our next team meeting. And if you are new blood, I need new blood on my team. Okay, and this is me, Alonzo Hall, financial services representative. You can email me at a.hall@cgwealthfinancial.financial, and there's my cell phone, 212-470-9932. The personal website. Oh, you're talking, okay, hold on. That is my Ethos website. Give me 1 second. That should be where is my Ethos site? So that's actually here. Let me copy that. Copy the link. And I'll put that here. So this is one. Oh, wow. That's the wrong link. Let's not do that. Yeah, no, it's definitely there. It's just I do have another one that's directly for applying. This is the company website where we're all together. I am going to create a personal website eventually, but right now, like I said, I got a plug with David Kinder. He said, I don't know if you misunderstood, but when you asked her to make she said, no. Yeah, I think I did misunderstand her. Competition is none. She clearly said no about that chili. But that's all good. So yeah, this one is here. But what I'm looking for is new blood, right? Because most of the agents on at CG Wealth are 50 plus, right? So what I've recruited is Talani Granger, who is a bit younger. And I've recruited another agent. He hasn't created his bio, so his name is Anthony Henry. I'll create a bio for him, in my all-star lineup. But these are people who are on Team All-Star, as I'm the all-star advisor, and they're all going to be on Team All-Star. So this is the younger blood in the industry. And the cool thing about being the younger blood in the industry is we are more tech savvy. So we're going to be having those Zoom meetings and stuff like this where, we can hold a webinar, etc., etc. Also, Rod, thank you for being pissed when I did my first Brunch and Wealth. I actually have to set up, I got to get the recording because we have the Brunch and Wealth 6 that we already did, which was the Harlem Nights themed one. And then we're doing another Brunch and Wealth this year. Yes, babe. The game's on? Yes, sir. Oh, folks, I got to get going. The game's on. It's
Bucks Eagles third quarter, 17 the Bucks is ahead. 17 Eagles.
Bucks are beating the Eagles. Good. All right, ladies and gentlemen. With that being said,
it's 23.
23 skunk. I knew the Bucks were going to win. So here's some of the products that we actually offer: annuities, college saving, disability, investments, life insurance, long-term care, and retirement. For business solutions, you can protect your business. You can workplace benefits, planning sessions. Obviously, if you want to join us, if you really want to join us, shoot me an email because I'd put you on my team. There's a lot of stuff that goes into actually being on my team. And I'm a bit like Tom Brady. I do require a lot when you're on my team. And I'm a hard ass, but it's worth it. Rael will tell you. He saw my numbers. You know, what were my numbers as of January 10th, 2022? From December 31 to January 10. I put in $20,000 worth of premium on 5 sales. I want you to do more if you join my team. And I'm going to put you in the position to do more. I want you to outperform me. Anyway, ladies and gentlemen, with that being said, it's your boy, the insurance junkie, your fiduciary fella, the all-star advisor, Alonzo Hall. And I've returned with that weapon and tapping on your head with that ADH wealth solution. So, is this for anyone, anywhere, among any states, or only in some parts? What do you mean, is it for anyone, anywhere, among any state? Yeah, we're licensed in certain states right now, but the beauty of being based out of New York is that we hold the trump card, right? So there's 3 states in this great country that are the most stringent states when it comes to having your financial services licensure. And those states are California, Florida, and New York. Why is that? Because, yeah, our services are in all 50 states. It doesn't matter what, we're currently licensed in like 12 states because that's where we've done the business. Prime example, I had a client who was in the state of Illinois, and I didn't have the license in the state of Illinois. Well, before I finish, I'll explain to you. So those 3 states, California, Florida, and New York, are the big Ponzi scheme states. So those are the highest regulated states, New York being the most regulated state. So because I'm licensed in New York, any other state that I want to get licensed in, I pretty much come in, slap my junk on the table and say, what's your fee? All I got to do is pay your fee and you'll give me your license. So I had a client who was in Illinois. I sent the application. I wasn't going to pay the licensure fee until he signed the application. Once you sign the application, I know that I'm actually going to do business in that state. So, boom. He said, okay, cool, because I don't need to deal with no morons like last time. Yeah, nah, bro, ain't no morons here. There's slight differences in state laws, but across the board, we operate in all 50 states, just like stockbrokers. When I was a stockbroker, I was calling people in, I was calling Pat Sajak in Baltimore. He cussed me out. One of my CEO, when I was doing stocks, biggest clients was Baby. I'm gonna get this straight with all 3 of y'all. That Baby. And his net worth at the time was $300 million. I thought he was broke because I just read an article about him getting a Maybach repossessed. And my CEO was like, oh, you don't know how rich people operate. And I was like, no, what do you mean? He goes, well, the way rich people operate is he can afford that Maybach. The reason he got it repossessed was because he wanted a very specific color of purple stitching in the door. They didn't put that specific color purple stitching. So he said, F you, Mercedes Maybach. I'm not paying for this $500,000 car because you didn't give me what I wanted. So repossess it. I don't care. Credit? What's that? I can buy that car cash. I'm worth $300 million in 2013. So at any rate, I'm going to get ready to hop off because I am missing my football game. So it's your boy, the insurance junkie, your fiduciary fella, the all-star advisor, Alonzo Hall, and I've whapped and tapped on your head with the ADH wealth solution. Ladies and gentlemen, if you've enjoyed that content, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I go live or release new content. And as always, please share, share, share. Lastly, to contribute to channel growth, to purchase life insurance directly up to $1 million with an instant decision and no medical exam, or to schedule a one-on-one appointment with a licensed financial professional, the links are in the description. With that being said, wipe ass, work in progress every day and see success. Wipe ass, work in progress every day and see success. Wipe ass, work in progress every day and see success. And when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Salute.